All right. So when we get here, and I've already, you can look at the previous, I think there's 4 or 5 videos that we've done. And I'm creating a full PowerPoint with all of the verbiage and the mindset and the techniques. And I'll send that out as we continue to develop it. So you can watch those 4 or 5 videos. I think Thomas has obviously tagged them all or put them in a folder where we've gone through the exact presentation here. Now we have gotten to the insurance quadrant. So hopefully we've gotten a lot of positive answers in our questions throughout the presentation, that the client wants to protect their family. They want their standard of living to be better, or at minimum stay the same, something that happened to them, but they're not in a position to do that right this second, meaning if something happened to them, their family standard of living wouldn't be better. They've picked the foundation. They understand the foundation of financial planning is income protection. You've gone through some basic questions on what the purpose of life insurance is. And now we are going to dig into their personal insurance situation. The insurance quadrant is your money maker. All right. This is where you make your money. This is where you get the commitments. This is where you pick up the policies. This is where you have an in-depth insurance conversation. Now, the thing about the presentation is you're doing 2 things. You are reading the client, and then also you're navigating the presentation. And so today's training, which will not be long, right? You guys know this is, God willing, this is the last Friday that I'm fasting this month. So I'm not going to be, lecturing for a long time. But I will go through a thorough presentation on the quadrant and some tips here. So you need to know where the slides are, what resources are on the slides, and what you need to do in every single scenario, okay? I've listed out as many as I could find and due diligence through talking and watching some of the videos online on the YouTube and stuff like that, and then talking to people as well, and then talking to people that close life business pretty consistently. So I'm going to go through the slides very quickly, then I'm going to go through the mindset and what you need to do. All right. So how much coverage do you currently have? Then the 4 ways to protect your family comes up. Each of these is an active link where you can click. Do you feel overinsured, underinsured, not sure? And then you can click on all of these 4 to come up. Here's no coverage. Currently you have no or very little life insurance protection on your own. You just do one of the following reasons: didn't see a need for it, didn't think you could afford it, didn't get around to it. Which one best describes you? Is protecting your family important enough you would be willing to begin setting aside some money each month to take care of this? If we can put together a program that would be affordable for you, is there any reason you wouldn't implement that program? Then here is the group. It's the state of Maryland certificate with some of the group certificate policy highlighted, and can the certificate be amended to actively at work requirement? I went over some of this last week as well. I don't think that was in the presentation folder, but it is in the, I think, building a premium hierarchy training. You can watch that. Group life continued, just explaining the different concepts regarding group life, the trend. You must be active payroll, you must be working. So there's no living benefits. Can you see why it's so risky to rely solely on group insurance? Can you see why we don't include coverage in our needs analysis? Then also on the group policy, right? You click on this and the video comes up.
Well, she knew her husband was dying. Of course, that was hard enough. Now the widow.
Okay, I'm not going to play that, but just want everybody to know what's there. Okay. Then cash value, we have the banks and fridges. We start with banks. If I'm actually going to do the entire banks and fridges, I start with fridges, but most of the time I'm just doing banks, where I explain the investment part of a cash value policy, that you can't withdraw money right away. You get a low rate of return. You have to borrow your own money. And then when you die, the insurance company keeps the money. Okay. And then if you look on the right, bottom right, there is the Dave Ramsey video.
80%, 90% of whole.
Okay. So you're using a higher authority close with Dave Ramsey. And then you also have policies. Okay. You have different policy examples here. These are all resources that you have within the presentation. Okay. And then if they have universal, which is it's a variation of cash value insurance, you have the funnel. I'm not going to go through that today. And explaining how the cost of insurance doubles. And the policy will lapse. Okay, here's another whole life. Or this is the same whole life. Okay, and this is the bi-week, the basic illustration. Okay, and you know what? I'll get someone to put a universal life policy in there as well. Shoot. And then we go to term insurance, what the experts recommend, quotes from Dave Ramsey and Susie Orman, then the benefits of our term versus the industry, and then you have a term example. You see the big icon right here. It is the State Farm policy. And then we have the theory. Oh, I X'd out, sorry. Then we have the theory and the second half of the data collection. All the questions are here on the theory, and then we go into the closing qualification. Okay, so, and that's a little bit more than what we're going to cover today, but let me get into my presentation now. All right, so all right, so there's going to be a lot of statements here. I want you to follow along. It'll be a little difficult because I do not have the presentation in front of me. I just went through it. But I want you to pay attention. If you have some questions, you can either message me or ask on the chat, especially. And now if you're new and unlicensed, don't worry about it. If you're brand new, ask your trainer for the question. But if, you know, more experience here, you want to have a question and I can answer it. All right. So insurance quadrant, if no coverage. Okay. And you can see I put a lot of these in if then statements. If no coverage, then you always go through group first. Okay. Why? Because, you know, they could be, you know, when deciding on a new bill, they could go be at work, they could talk to somebody, they say, hey, you know, somebody says, oh no, why would you get insurance? Why would you get something here? We have something at our job. It's great. I pay $2 a month. And then they, you know, they're like, they remember the appointment went so fast and, you know, they forgot what you were saying. And then they, you know, you said, oh, you know, it's a deposit, this and that. And then they call you, they text you, they ghost you, and they don't want the policy. Okay. So you don't want anything coming behind you so you can miss the sale. All right. You don't want to, you work very hard to get the application. So you want to make sure that you prevent that from happening. So we're always going to go through group first. Would you mind if I showed you a little bit about group insurance? Would you mind if I educate you? If you have a trainee, it's a perfect, hey, I'm going to show this to Marin. She doesn't really, she's brand new. This will be great for her training. So always go through group first and show the video, okay? Then you go through no coverage and you ask all the commitment questions. You do not skip any of them, okay? You ask all of them. The only one you do not need to ask is, you know, on the policy, if they don't have, you don't need to ask the attachment to the agent because they don't have a policy, all right? And if they have no coverage, close the application. Close, close, close. You're going to proceed as far as you can with getting the application right then and there, because they're just going to see if they're going to qualify for coverage. If they have group, it's the same process as no coverage. You are going to destroy group. Now, if they have no coverage, you are going to still go through the group first. If they have group, and I want people to pay attention here. So, some people, you have to talk about group. Some people, they have group. What does that mean? They love their group policy. They love their company. They love their benefits. They think that their company is going to take care of them no matter what. They think they work for the safest company. They put all their trust in their employer and their benefits. You must absolutely unload on group. So if I talk to somebody and I say, hey, John, and they tell me they have group coverage, and they like, no, yeah, I have group coverage. It's 5 times my salary and 2 times for my wife. And I pay this and I have that. It's, you know, it's underwritten through this and that. You need to unload on group. Okay. You cannot move on from it because you'll never make a sale. You need to be very thorough. You need to become passionate. You need to show the video. You need to go through all the questions, especially at the end. You need to unload every one of your stories that you have. Right? I put here, you know, also understanding health and insurability, because a lot of people think, oh, I'll just get another job and I'll get insurance, or I can just qualify. I always remember you can't always just qualify, right? I was talking to, I think it was Jen, was texting me. You know, she had a client, Jen, I could be wrong here, that got rated like 4 or 5 times the premium for driving. It's just like, dude, you can't even drive bad. Forget your health. If you drive bad, you're going to get rated. I mean, imagine that. You think everything's fine and you get hit with a reckless ticket and your insurance premium doubles or triples. Right? So your insurability can change in an instant. In an instant. And then you cannot get life insurance coverage privately. So health and insurability, if they have group and no coverage, close, close, close. You are going to proceed as far as you can into the application. So no coverage, we go through group, then we go through new coverage. Group, we go through group, and we really destroy group, especially if they're attached to their group, and then we go through no coverage. And when you're going through no coverage, you're getting all those commitment questions. You know, would they set aside money, if it fits their budget, all the questions that you're asking them. Okay, if they have a private policy, if they have a private policy, you're going to ask a lot of questions. Now, I might even throw a question in there like, oh, I noticed you have a private, you know, is there a reason why you purchased that? Do you have anything through your employer? And I just want to hear what they say, because if they confirm that it's not enough, or I felt I needed to get something privately, you have somebody that has a general understanding of insurance and private insurance. Okay. And remember, through asking a lot of subtle questions, it disarms the client and they start talking about what they have. If you go right into destroying their policy, it's a problem. okay, because they're going to get defensive. Do not do that. So you're going to ask questions. How does the policy work? How much do you pay? When did you get it? Do you know the rating that you have? Why did you get it? You know, why did you not? I know you have work, you have something through your group. Is there a reason why you felt you needed something outside of that? How did you get the policy? Do you know the agent? All that stuff I'm going to ask right away. Okay. Even before I go into the cash value slides and all that stuff. And my goal is to create doubt, because I want them thinking this is something very important. It's insurance, and I don't know anything about it. I don't know how the policy works. I don't know how much I'm paying. Okay. Now, if they have any sort of cash value policy, we're going to go into the banks and fridges slide, and we're going to use policy examples. And if they are attached to their cash value, okay, some people, when you bring up cash value, and it's very typical, one of the people that's insured, you know, either the husband or the wife, is going to be against cash value. Okay, they're going to be like, it's too much, and something's wrong with it, but you know, we wanted to get it. My brother-in-law sold it to me. My sister sold it to me. A coworker sold it to us. Someone that went to church with us sold it. But you know, I feel like it's a lot. I don't really know how it works. You know, I've been seeing advertisements that I can get something much cheaper. I don't want this. Okay, but if they love their cash value, then you need to unload on cash value. You need to destroy it. You need to show the policy examples, and then always play the Dave Ramsey video. And if they have a policy, it's most likely 9 out of 10 times going to be a carryback. And remember, with your carrybacks, you have to have a tremendous sense of urgency. You want your carryback to be 1 to 3 days. Okay, 7 days is the absolute maximum you go back. Anything after 7 days, you probably got to do a brand new appointment. If they have term, you're still going to create lots of doubt. Policy coverage, overinsured, underinsured. Are they happy with the length of their term? How much are they paying per month? Do they know what happens at the end of the term? I'm creating doubt. And then you're going to go to the term slides, and you have to go through understanding our benefits and one trick pony and why our term is the best, living benefits, guaranteed conversion. That is an in-depth conversation. I'm not going to have that right now. Okay, but you need to go through industry term versus our term, and you want to create a ticking time bomb with their policy, an explosion of premiums that they will not be able to keep this policy, because after the term breaks, there's no option to even renew it. With ours, our term breaks, but there's an option to renew because we have the best product in the industry. We're the #1 term insurance provider. If you're brand new, don't worry about that. I know this stuff will go over your head. You can come back and watch this after you've seen a bunch of training and field training appointments. This will all make sense eventually. Okay. Okay. Now, and you know, I want to give you a couple things in terms of, you have to be very creative when getting policy information. Okay. It's not as simple as when we're in the home and they're sitting right there and you could ask them to run and get their policy. Okay. So, and if anybody wants to post to the chat any creative ways that they've done it, I know you can get pictures and they can send you pictures of the policy. Okay. You can look up policy information online and they can create a login, or you have a login and they can log in right there and share your screen. You also, at the very minimum, they can pull up their bank statement and then find out the policy premium. And usually you can tell what type of policy it is, right? If it's $100,000 policy and it's $100 a month, or 200,000 is $200 a month, it's going to be some sort of cash value, right? You can basically tell on the premium. Also, you can tell by the company that's debiting them that what type of policy it is. But if it's a significant amount of coverage for, a fraction of the cost, the cost, then it's probably going to be a term. I want everybody to pay attention here. If people say they do not know anything about their policy, so I talk and Josh says to me, well, you know what? I don't really understand any. I don't know. I don't remember. You cannot let them off the hook. You have to keep probing professionally, politely, but you got to keep asking questions about their policies. Okay, do you know when you got it? Why you got it? Do you remember the company? Has your financial situation changed since you've gotten it? I mean, I'm going to ask so many questions. They don't know what I'm doing, but I'm going to ask a lot of questions so they think in their head, in their mind, I really need to know about this. I can't even answer these basic questions. I got this policy. I'm paying every single month. What am I doing here? You're not saying that to them, but they're thinking that. Do not let them off the hook. Also on term, know the difference between annual renewable and 5-year renewable term, right? And ours is level term. So our premium stays level for 10, 15, 20, 25, 30, or 35 years versus some industry term. It goes up every year. It goes up every 5 years. So they could have been sold a 10-year term. Okay, so you have to ask, you have to know those questions because, that they could still need a lot of coverage in that 11th year. Their kid could only be, 14 years old, and then they're not going to be able to, they're going to have to go to cash value or whatever it is, right? Also, and another thing that we'll work on, I'm making notes on here, is SGLI, VGLI, and FEGLI are not on here, but we will try to put something in the presentation. Maybe it would just be a summary slide. It'll be very easy. You need to know how to destroy all those, especially if you're in an area where there's a lot of military presence or a lot of government people, like where we are. In the local area, we're home of the federal government. You need to know these things. And also, if you can destroy that type of group and that type of group term, you can really destroy almost any group and any term insurance. So it's very, very important. All right, now, quoting people, okay? Always do the theory. Okay, always do the theory and get a snapshot of their personal financial situation. Okay, at the theory, you have permission to ask them as many questions about their personal financial situation as you want. How old are you? How old are your children? What are their names? What do you have immediately saved up? What's your debt situation? How much money do you have in retirement? Do you have an old 401k? So you can get a clear snapshot of where they are today financially. If they have no savings, lots of debt, young children, a mortgage, and no coverage, it's going to give you more confidence for getting the application right there, right? And I just did this 2 days ago, right? Where I sat down with the person, and I sat down, lady, and she's like, and even her, I said, okay, and I didn't do it to make her feel bad. I did not do this. The person had 3 kids. And I said, okay, how much do you have in retirement? She said, nothing, and I said, okay. And, that's something that we'll definitely address. We'll talk about that. I wanted to make her feel good. We'll definitely talk about that. 2, how much do you have in immediate cash? If something were to happen to you, how much do you have right now? She goes, about $6,000. And she said it very apologetically. And I said, okay, that's okay. All right, 6,000. I said, how much do you spend a month? 5,000, right? How old are your kids, right? She saw it. She could start seeing it. Like, I didn't have to say it. She knew I need coverage. I need to apply. I have no reason to procrastinate. And when we did the application, she goes, She asked me, when does the coverage go in force? Because I didn't even finish the process close before she asked me, when does the coverage go in force? I said, it goes in immediately. You're conditionally covered up to 500,000. You just got to get your medicals done as quickly as possible. That happens from getting a clear snapshot of their financial situation. See, we've talked about insurance throughout the presentation. We've educated them. We've even asked them questions. But the theory is where it becomes real for them. And they can see, okay, right now, you may need a lot of coverage. Why? You don't have money. That's why. But later on, you may not need that coverage because we're going to transition you debt freedom, saving for retirement. Remember also when quoting, do not quote unless you have time to do the application. Okay. We're not in the quoting business. We're in the closing business. You know, if you feel it's going to be a carryback, no matter what, I would not get into the quote. Because, you know, then they may shop you online and get all the policy info. I already talked about that, pictures, premiums. Let's see what people have in the chat. Jen is saying that sometimes if they have the policy in front of them and she knows the policy, so she'll have the client read the policy to them, read the key points, what type of policy it is, the benefit, looks for the pages and makes them read them out loud. So it's them reading it, not her, and it processes and digests with them differently. So that's another trick that you can use to get the policy information.